saved $79,700 on a stock trader by making one change that flipped their whole tax profile on their head. And this is what tax planners do. They look at your facts, your circumstances, and everything, and they put a plan together that ideally doesn't make you have to change a lot in your life, and you don't have to go crazy. I am a CPA, a retired CPA. I am not your CPA. So this is technically not advice, and you need to work with your CPA to make it so. I'm gonna break this down. It's super nuanced. We've got 461L, we've got AGI changing, which changes phase outs, but I'm giving you this example because this is a real life example for a client in 2026. And it's something that so many CPAs miss. And if you are a stock trader, there's a massive amount of federal court cases that we have to dig into to understand the boundaries, the rules, and also make sure your CPA understands, because I don't file tax returns. I just do tax planning as I am a retired CPA. So I say all this, and I'm going to share all this to show you the complexity of taxes, but how changing certain numbers unlocks free money. It traps some money sometimes, and we always leave a plan for the future and certain holes to fix. So if numbers change, because they're always going to change when you're a stock trader, you don't know if the money's going to go up or down, we always want to plan and leave room for that. So this client also has a W-2 and a day job. They also like to trade on the side and make really good money. So we're going to break this down for you and talk about how the 2026 profile he brought me, and then how we made a few changes with his CPA sign off and got him across the board to really change everything. So my client came to me, he was single. He had a W-2. His W-2 was $231.5K. So this number is not gonna change for the whole year. So pre-plan, post-tax plan, this number remains the same. He also came to me and said, to date, I've realized gains of $155,000. So he's almost made his entire salary, and we're only in April when he came to me. He also said, hey, I have these unrealized losses, meaning certain stocks had gone down in value, but he hadn't traded them out. And he said, is there any way, because I have a lot of losses, $232,000. So we talked about it, we talked about his activity, we analyzed it. There's some code tied to this, but it's mostly federal court cases that we have to lean on to make this classification change. And this is where you unlock the superpowers. Then what we did was because we're early in the year, we did a small oil and gas investment for him. He did $31,250, so he reduced his taxes by $31,300. He did this because he wanted to understand how the cash flow works, and he wanted to test one of the vendors, one of the funds that he wanted to invest in. So he did a small amount. They allow him $31,250. So he's testing them out, and he knows within the next 3 to 6 months he's going to get checks. By October he'll have cash flow if the operator promises what they promised and follows through. So he did this just to test, because this is going to be our plug if he goes crazy in the stock market and makes more money. Because if he makes $155,000 in 4 months, multiply that, 4 times, that's a lot of money. So we need to have a plug. So we have an oil and gas investment, which was already made April 26. This one is a hold, a placeholder. So he has not made this one yet. And we do that because when we plan early in the year, every one of my billionaire clients comes to me in the early years. So Q2 usually is when they come to me. We go through their taxes, we go what's happened in Q1, and then we go through what they're planning to do, and then we plan accordingly. So once you've vetted a vendor and you like them, we put a placeholder in our spreadsheet, because we're gonna follow up with you October, November, and button your numbers down when you know 3 quarters that's happened. And as we land into December, we'll refine, and then December 1st, we change, close everything out, and we call it a day and go have fun for the holidays. So this is how we plan in big, fancy, schmancy, ultra high net worth. And I like clients that come to me early because they can do things like test vendors and make sure that when they're investing it month and December, they know they're confident, they know they got their cash flow, they know they got their deductions, everything's good and dandy. So let's keep going. So with the pre-plan here, he had an adjusted gross income of $386,000.5K. Okay, so this number as a single filer phases you out of a lot of free money. State and local tax minimized, all kinds of stuff. So we start to look at different things and we have to look at the phase out levels and we have to analyze a bunch of stuff. So here, we're gonna be looking at this number because this is the phase outs, phase ins, as well as his single status gives us the amounts. He itemized his tax return. So we went through and listed out all of his bills for the year, and we are estimating 7.7K between California state taxes, real estate taxes, mortgage paid, personal property taxes, car registrations, boats, that kind of stuff. So then he had a little bit of Q-buy from some real estate that we estimated, his previous CPA estimated. So we're gonna keep that the same year over year until we get closer and know if he's gonna sell, keep any, make more, buy more, whatever. So his taxable income, we were estimating to be 325.5K, okay? So here, this is a pretty high taxable income for an individual. You're in the 35% tax bracket for a single filer. So we estimate his total taxes to be 80.9K. He had net investment taxes because of his capital gains, and this net investment is when you're an investor status. So this applies, so we calculated that at 4.5K additional net investment income tax. Then he has the 0.9% additional Medicare tax because his adjusted gross income is very high, modified adjusted gross income is very high. So we estimated that to be another 0.3K. So total tax before tax planning here was 85.7K. So this here is what he was facing before he met me. And he's like, I need help. I don't want to pay this. So we went through, we analyzed. Mainly, he said, I do a lot of trading. I said, define a lot. He gave me some numbers. I looked at his last year's facts, pulled the numbers. I said, you know, I think based on the federal court cases, this is what you need to do. I gave him a trader profile. I said, let's talk to your CPA, see if they agree. I'll give them my memo. Handed his CPA memo. CPA said, yep, I agree. I think he would qualify as trader status, trader tax status, okay? What does trader tax status do? It changes everything. His entire stock numbers now go on Schedule C. They don't go on Schedule D, Schedule B. Forget about it. Now you have a business. You are in business here. So this gives him a Schedule C. What happens when you have a Schedule C? You are no longer limited to stock losses of 3K a year like you are when you're an investor. He can take all his losses to offset his income, and if there's extra losses, he can offset them against his other active income because Schedule C is a business. So we reclassified everything. Here in his Schedule C, he now can deduct part of his internet bill, he can deduct home office expenses, he can deduct a lot more deductions because he's now in business and using his stuff at home to trade. So here he said he had $232,000 in unrealized losses he wanted to trigger to rebalance his portfolio. As we shift and the market shifts, he wanted to rebalance. So he was going to take these losses would offset capital gains. He said he thinks he estimates his capital gains are going to stay at 155. He's not sure because the market is very volatile right now. So we left these numbers where they are. We left room for a plug, but because he's a single filer, if you add these two numbers up, we have 263.3K. what happens? $461L limits how much you can deduct in losses, business losses. So this is a business. He has another business here. He has some income here. So when we add the 155 in, he still has excess business losses. But the goal being net, we want to stay under this 461L limitation, and that number is 256,000 for a single filer of losses, business losses, excess business losses that you can carry into your tax return. So when we look at all these numbers, these are things we're constantly looking at, because right now, depending on how these realized gains come through, if they go into losses, now we're gonna have a big problem, and we're gonna have a 461L limitation here. So assuming this 155 wasn't here and we had 263K, we would limit these business losses between the oil and gas investment and the Schedule C. His oil and gas is non-passive based on Treasury regulations. It's clear as day in there. Then now we would have to plug a number into here. That number would be about 7.3K, okay? But because we're offsetting these two now combined on the tax trader status, we still have some room. So this is something that we're gonna manage because we get to combine the 155 in. So we can go up to $256,000 in losses. What happens if he has $256,000 in losses? That offsets his W-2 wage completely, and he has no tax bill. This is what proper tax planning does. We plan into how we profile you, how we categorize you, how we label you, depending on your activities. We don't want to change your life. We want to add to your life or change how your tax return is filed. So we signed off with his CPA. CPA said, yes, Schedule C for 2026 if he does these things for the whole year. Cool. He has his marching orders. He knows he needs to make trades several days a week. He needs to make several trades a day. We got all the rules, how many he needs to make for the year. So now his adjusted gross income is 130.5. His itemized deductions changed just a little bit. They went to 59.9K when we ran the numbers, because these are just constantly rolling numbers. So we gained an extra few deductions here from our tax planning. We kept his QBI the same because, again, we're going to look at that in November. So now his taxable income becomes 68.2K. 130 minus 59 minus 3,000. Okay? This is a massive change here in taxable income. He now is under every phase out that is possible for a single filer. We hacked the system to plan into, to help him alleviate his tax bill when he was already doing trading. But his CPA last year missed it, so guess what we're gonna do? Maybe file some amended returns for him. So we're looking at a bunch of different things, and this is why it's important to work with someone who's super knowledgeable about the nuances of the tax code. So as we look at his tax bill in his new brackets with the single, he's no longer in the 35% tax bracket with the 68 grand, okay? So now he only owes federal, I'm not talking state taxes, 7.9K. He's in California, it's a pretty high tax bracket. Now what happens, he's no longer an investor. So all the net investment income tax that is added on top for wealthy people, air quote wealthy because he's in California single, this now has gone to zero because this is a business. Any gains that he had that would have triggered net investment income taxes is now gone because it's now business income. Additional Medicare tax stays the same. He's got over a certain number of AGI, he's got to pay this. So this 0.3K stays the same. What happens? Now his total tax due goes down even more. Why? We have his child tax credit that now he unlocked. We went from 300,000 where he phased out, we went under 200K. Now we unlocked the 2.2K free money. This is where, if you know all of the details, all the tax credits, everything, we're gonna add this in for you because you have a kid. They're under 18, they live in your roof. Have them pay for have the federal government pay for some of their food, okay guys? So now his total tax due is only $6,000. Pretty cool, huh? Pretty good savings. Just by changing a classification, adding a tiny oil and gas investment because he wanted to test it out for cash flow purposes, not because he really cared about the investment. He just wants to make sure that the rates of returns that they're saying he's gonna get. So he can compound his income more when he takes some money here and puts it in a tax deduction. This will help offset. So if he does make $155,000 every quarter, that means come year end, he's gonna go from $155,000 to $620,000. Now we can plug what he needs to invest of that $720,000 he made to offset so he can maintain these numbers and still get that child tax credit. This is why we label this, it's a plug. Right now, he has a free $7,300 to unlock. If he makes more money, he'll unlock that. That's gonna automatically, the 461L will fall off. And now we're gonna go back through and rebalance his whole thing in November, and he's gonna be a happy client and refer me lots of business. And so if this is what you wanna do, if you are making $250,000 single, $500,000 mailing, filing, joint, click the link below, book a call. I wanna work with you and help you out too.